Good afternoon, everybody. Markets are almost ready to close on Friday. Today is the 22nd of November. Hope everybody is doing well. Continuing on a very slow movement up. The market today actually did very well. Actually, if you look at it, it gapped up very high before and then seems to have just petered out. So this was a strong move up. Mostly we'll end up about 80 points. The NASDAQ is up about 80 points on the day, about 0.5 of 1%. The S&P 500 also up a little bit. Not a bad move, actually, if you look at it overall. About 20 points, about 0.4 of 1%. And the Dow Jones Industrial Average also up about 188 points, roughly about 190 points, roughly about 0.5 of a percent. All three indices actually moving up and to the right, which is a good sign. On very low volume, the QQQ, an indicator of NASDAQ, is actually doing just 38 million in volume compared to the usual 56 million. So holiday mood, most people are probably heading out anyway. And just the broad market indices, just to give you a little bit of a better context, advanced decline line, which is the number of stocks doing positive movement versus negative, is up 57% to 39. So that means it's a good sign. The market is heading up to the right for a little bit at least. It might take a break, but right now this is a good sign. New high, new lows, 1,400 stocks actually hitting new highs to only 20% of them hitting new lows. So that's a good sign as well. And then the moving average is above the 50-day moving average, nearly 7,600 stocks, 53% are moving above. So all the major indicators that I watch at least seem to be doing very, very well. One of the stocks that came up on the radar is Aflac. Let's take a look at why it's actually doing well and showed up on the radar. Aflac is a company that provides supplemental insurance. So we're going to go through a 5-step process, starting with the financials. When we start with the financials, I'm going to go with the income statement first on an annualized basis, and then I go to a quarterly basis. So the company did about $22 billion, and it's actually gone down since. So that's not a good sign overall from a fundamentalist perspective. This is not a company that's growing very well, but if you look at the net income, that's actually doubled. So revenue is not growing. Net income is almost 1.5 times to nearly 2 times. So that's a good sign. So it's making a lot more money now, but it's not growing its top line, which may be okay, I guess, for an insurance company that's been around for quite a bit of time, but I don't usually like to see this. On a quarterly basis, this is probably the reason why. So quarterly growth has been negative for the last few quarters, and then suddenly you look at it at 2% growth. Obviously, the comparables are very, very good, and this suddenly starts to look a little bit better. 18 billion trailing 12 months, so even lower than the 22 billion they did last year. And then net income has been also growing a little bit, but this time it seems to be a little bit of a flattening out. So the next quarter will probably be very good given they had a negative earnings over here. But overall, I think it's okay. I think the fact that it's actually finally growing revenue on the balance sheet side is a good sign. The balance sheet side, 120 billion in assets. Let's see, most of it is probably in non-current assets. Actually, it's in deferred. Yeah, deferred charges is probably the biggest reason why. And within the non-current assets, most of it is going to be in deferred assets. So not a very, very good sign, but it's okay, I guess, to a certain extent. And then if you look at the debt they have, is about 7 billion, net debt about 202 billion. Not bad. Typical insurance company, old school company. So this is purely going to be a technical play as much as it is anything else. Fundamentally, this is a good company, but not a company that I would say is going to be something of a keeper for a long term. Price to earnings 10.8, given that it's with negative growth, is okay. And price to sales of 2.7, given again such an insurance company. Margins, the net margins in 30% range. Look at that, beautiful net margin growth consistently. So they've been driving profitability very, very well. And in terms of dividends, let's just quickly check. Yeah, they've been paying a steady dividend of about $1.20, $1.30 on a yearly basis per share. So that's not a bad sign. Quarterly dividend is almost about 50 cents. So this is the good sign if you're holding the stock, but I wouldn't hold it for too long. On the monthly chart, let's look at Aflac. It's been a very, very beautiful move. So very, very good base building, strong move up, stage 4 decline, stage 1 movement, consolidation, another consolidation, stage 2 movement up, stage 4 decline, stage 1 consolidation, stage 2 move up. So right now, I would say it's still on the move up. Aflac is on its way up and to the right, which is a good sign. Look at that. That's where I would draw. So there's no real near-term resistance. We got to find some support. So it's actually hitting all-time highs, which is probably a good sign for it overall. Again, because of net income, not because it's actually growing its revenue base. So that's what it is on the monthly chart. On the quarterly chart, okay, this is a very steady performer that has been consistently following the channel for most parts, right? So I'm going to adjust it out a little bit, making sure that we keep this in mind. So on the very long-term basis, this is ascending. It's hitting all-time highs. So there's no resistance near term to speak of. And the near-term support is going to be in the 75 zone, I think. I'm going to find a little bit later and find a better support zone, but this is definitely one support zone. Did a touch over here, has done a couple of touches. Worst case is probably going to go down a little bit more to the 73 zone, but not more than that. But in the near term, let's keep this 75 zone, at least if we want to be able to check 75, 76 zone. Don't see any major flags, red ones on the weekly chart. And on the daily chart, okay, so it's done a couple of moves and it broke through this. So this is a higher high. So this is what moving within the channel looks like. A higher high and a higher low. So within the channel of it moving up, it's also done a mini move up in terms of channel. That's also a good sign. Look at that. Beautiful. Very nicely forming the channel within the channel, moving up into the right. So that's a good sign as well. I actually like the stock quite a bit. It's been slowly moving to the upside. My suspicion is it'll go back into the channel, wait for a pullback. Something like a pullback into the 80 might be a very good sign. The 80 pullback, so this doesn't move like a significant amount on a daily basis, except for look at this beautiful candle. This beautiful candle on earnings, and this is probably the reason why. And another earnings, oh yeah, this is after earnings candle. Very tight flag pattern after earnings. I'm going to remove these. So, on the long-term basis, or we've seen on the long-term basis, this is actually going up and to the right. That's a good sign. I think that's a very good sign for this. It's within the channel as well. This is the flag that is the most relevant. After earnings, very nice, beautiful green flag. And then look at this. This is the flag building post earnings. So this is definitely going up, guys. I would wait for a buy somewhere in the 80, 81 range, and then make a move to the 85 easily without a problem. This actually shows a very good sign. Actually, this might be a good hold for a couple of months at least. Aflac is the ticker symbol. Buy it about 80, keep it till about 90. This is not going to go down. 10% move on the stock is not a bad move, and it's totally expected. Thank you very much for watching the channel. Please like, subscribe, and share. And if you find it interesting, tell other people about it.